to the way that FICO, Experian, TransUnion, and Equifax, the way that they actually report credit. So what you're actually going to see is after July 1st, anything with respect to judgments and tax liens is no longer going to be reported on your credit report. So if you were, denied a loan, or they charge you a higher interest rate because you had a judgment or a tax lien actually reporting on your credit, after July 1st, whenever you pull a credit report, that information will no longer be displayed and won't affect your credit scoring module. So usually, like if you had like a recent judgment or a tax lien or something like that on credit, it could lower your credit score 100 points. And it could be a deal killer if you're trying to buy a house. And so now, by omitting this, it's not going to impair your credit, so you have an opportunity or chance to be able to qualify for a loan. And so if you have something that's older, that's no longer going to be reported either. And so I think it's a drastic move, and it's a radical move, and I like it actually. I think it's because a lot of the information I'm going to tell you that's on public record is inaccurate. You have stuff that's 5, 6, 7 years old, 4 years old, stuff that's been settled by people and it still reports on their credit. Half the stuff I look at, probably about 50 credit reports a day, and half the stuff on there is wrong with people that's reporting. It's hurting their score, and it's affecting their ability to get a loan. And that's ridiculous. I mean, and for example, if something is reporting erroneously or incorrect, and it's affecting their chances to get a loan, it doesn't make any sense. So either report the correct information or don't report it at all. And I think that's what they're saying is that, hey, you guys are not doing a good enough job on public record to report this data. So because of that, we're removing this. And I think that it's a great move. I really like it. I'm really excited to see after we start reviewing credit after July 1st what's going to happen, because I think it'll be a huge change and people's credit scores and their ability to qualify for a loan. So I really like it. I'm excited to see the future of that and how that plays out. The other thing, what we're also seeing right now, with respect to the economy, is still a super strong, hot, smoking stock market. That stock market is just relentless. I mean, it won't take a breather. I don't know, what's going to happen with that, but it seems very concerning to me. And I'm not a doom and gloom type person. I'm not a pessimist. It's just that, all I know is that the higher something goes, the easier is it for it to fall. And if it falls, it could fall hard. But who knows? I mean, I don't know. I don't know everything. It just seems that the real estate market and the stock market are, highly correlated right now. And usually when that happens, there's some type of correction, and I don't know when that's going to happen. Interest rates they're a little bit higher. The Federal Reserve did raise interest rates last week. We saw that. And mortgage rates have it has translated over. The short-term Fed funds rate has transferred over to the mortgage rate side a little bit. So you're seeing interest rates starting to creep up. We are running now to July. That first-time buyer tax credit is going to expire in October. So if you're looking to buy a house, now's the time to get off the fence and buy, because after October, if you are trying to do a zero down program, you will have to put a down payment or pay your closing costs. So just keep that in mind if you're looking to buy a home. But yeah, the market is very, very hot right now. We're seeing that still people are, it's multiple offer situations, people putting 10, 20, 30 offers on a home, getting no concessions, waiving option periods just to try and close and get in their house. So, I mean, it's crazy. And so, but that's what we're in, and I can't control it, and I don't think anyone else out there can. We'll just have to see how all this plays out. So it's a huge, it's a huge awakening, and we're just gonna have to see where all this shakes out. Do we go higher and higher, or do we pull back? And I think that's the question. For me, I always look at things as a risk to reward. And to me, the risk is, to the downside, because, if you're playing poker, what are the pot odds here? The pot odds to me show that if, how can this thing keep going higher? To me, I'd rather, risk one to make two versus, risking two to make one. And that's why I wouldn't be a buyer up here of the stock market. Real estate market, what I'm seeing is that if you wait and you sit on the fence with that, and home prices go higher and higher, you know, I'll just give you an example. I had a customer in Austin, Texas. A year ago, this house appraised for $200,000, and now she's paying $217,000 for the home, and by just waiting a year. So I mean, the house cost $17,000 more, so her payment is $150 higher a month because she waited a year. And I told her a year ago, hey, you might want to think about buying a house now when interest rates were lower. Back then, a 30-year fix was at 3.25. Now you're almost at 4%. So the interest rate's higher and the home price is higher. So it doesn't make a lot of sense to wait to buy a house when you can do it right now when you have interest rates low and the homes are still affordable. If the longer you wait, the further and further it's going to get away from you. And that if those house prices go higher, what if next year instead of 217 it's 240? You see what I'm saying? So it doesn't make a lot of sense to keep waiting if you're renting and spending thousands of dollars a month on rent when you can own a house, especially if you have down payment assistance, first-time buyer tax credits, USDA loans, all these things to help you to be able to buy a home. So now's a great time to buy a house and be a real estate owner because there's nothing that you can do better with your money, and you know, instead of investing into real estate or an appreciating asset, putting into rent, there's no return. It doesn't make any sense to do that. And so I'm a big advocate of home ownership. I've owned a house. I've always owned real estate or apartments, and I think it's a wise move to do. So anyway, that's what's going to summarize it for this week's of the market edge and what's kind of going on. The biggest things again with the credit scoring you're going to see take effect July 1st. If you have tax liens or judgments reported on your credit, expect to see that removed after that time frame and see a huge impact on your credit score. My name is Angelo Christian. We come out every single day and provide great content to educate people with respect to mortgage and finance. You can follow me on Facebook at Angelo Christian Mortgage. You can follow us on Instagram or on YouTube. Please subscribe to our channel. Follow us. We come out every single day. We provide fresh, great content for you guys to educate you about lending, mortgage, finance, and real estate. We'll be back next week with another great edition of Angelo's Market Edge. Take care and peace out. All right.